Easing off just that bit, we're down about almost 0.5% in trade. You're with closing trades right here on ET now, and we're pretty much around the session lows, one would have to say, because we started off much quieter in today's trading session, and that lingered into a bit of a narrow band, so to speak. So around the 23,500 print, that's where we're currently at. What continues to be critical to monitor is the FI buying. Is that here to stay? At least the data or the trend over the past couple of trading sessions seems to be indicating so. Because we've seen consistent buying and not a minuscule figure, a good one at that. And yesterday as well, it was to the tune of about 5,000 odd crore rupees. So continues to be a big cushion for the market. Today, of course, we are much lower. We're down about almost 140 points. Yesterday, of course, was a much quieter session. But then again, you've got the monthly expiry as well, coming in tomorrow. There you go, 5,300 crore rupees was the buying in yesterday's trading session from the FIIs, and it's been a continuous spree ever since March 20th. So let's see whether even today you have a buy figure when the data comes out in the evening or not. That said, the weak hands seem to be getting shaken off. I mean, look at the rebound that one has seen in trend, for instance, from those 5,000, sub 5,000 levels, the stock has made a consistent move up. It's back at 5350 odd levels right now. M&M, of course, has been a strong show. It's climbed back to those 2,700 plus levels. BEL has been seeing a consistent move up. So quality blue chips, which have had a fall in the recent market correction, they're finally seeing some consistent buying coming in. That in itself should be a telltale sign. But that said, the laggards as well are fair enough for rather large today. The likes of an NTPC is cracking about 3%. There's Kotak Bank, which is down, Infosys, L&T, Reliance, ICICI Bank. But let's try and figure out from our experts whether this is just expiry-led adjustment. Remember, next week is a truncated one, with Monday being a trading holiday for us here in India. So, the trend has completely reversed for the market, and is this bounce likely to sustain or not? Kunal, Naresh here with us. We've also got Dipan Mehta joining in on the show right now. Naresh, hi, afternoon. Let me come to you first. What is it that you're making of the Nifty texture today?
So the last 2 days to end the financial year, and we've seen a recovery all the way to 23,800, which was the previous swing high. And now we may start making a higher base. 23,300, 400 now becomes a support. 23,800 to 24,000 is the resistance. We've seen 24,000 is the 200 DMA, 23,800 is the previous swing high. So overall, time for some range-bound move for the next at least 2-3 sessions.
Range-bound move is what we should expect, at least for the next 2 to 3 sessions. In fact, the flash on the bottom of your screen, you have the 10-year benchmark bond yield also that's fallen to the lowest level since January 2022. Remember, later today, you will have the outcome of the borrowing calendar meet that is going to be taking place between the RBI officials as well as government. So watch out for that. Bond yield definitely right now, January 21st, 2022 low is where it has hit at this point in time. But let's talk about the Nifty rejig, because it's that time of the month again. All eyes are set on the March Nifty rejig. You have Zomato, which is now known as Eternal, as well as Jio Financial. They're poised for inclusion. So let's go across to Sharad to understand what kind of inflows the street is actually watching out for with regards to that.
Good afternoon. Firstly, tomorrow will be a very action-packed day. There, of course, there's a Nifty index rejig, but also the expiry would be there. So, of course, there will be volatility, especially in the last half an hour of trade tomorrow. But as per the note by Nuvama Alternative and Quantitative Research, the Nifty 50 changes, Zomato comes in, BPCL goes out, and for Zomato, there's an inflow expectation of $602 million, while there's an outflow expectation for BPCL coming in at roughly $225 million. Also, Jio Financial Services will be included in the benchmark indices of Nifty and expecting a $308 million inflow, while Britannia will be going out and a $238 million of outflows is expected. Also, apart from the Nifty 50 index changes, there is also Nifty Bank where the weights are being adjusted, and over here Federal Bank would be in focus. They're expecting a net flow of roughly $17 million, while the key outflows is expected for Kotak Bank coming in at roughly $67 million. Also, the CPSE, the public sector index, which is tracked by NSE, over here Power Grid is expected to have a net inflow of roughly $54 million because of adjustments, while outflow for NTPC is expected to the tune of $66 million. Now, also apart from this, there is an important analysis which has taken place on how expensive the Nifty would be before and after the changes happening in the rejig. Now, of course, the before numbers, if you look at it for EPS, it stands at roughly 1186 for FY26 and FY27 is 1349. Post the inclusion of Geo Financial and Zomato, this EPS expected to come down 1171 and 1335. That's the expectation for FY27. Also, on the other hand, if you look at how the richness is being panned out, the P ratio we have taken before this inclusion, the ratio is just below 20, and for FY27 it's below 18. But after the inclusion, Nifty will turn expensive. The valuations coming in at almost 20.2 times for FY26 and for FY27 coming in at 17.7 times. So of course Nifty will turn expensive after the rejig, and also the EPS will be coming down, as of course both the companies, if you look at the profile itself, they are not very large profit making companies. So that's one cause of concern. But overall, this is the new composition taking place where new age companies are coming in the Nifty composition.
Okay, that's that on index rejig and what's likely to happen and the kind of outflows and inflows that it would incur. But let's welcome on board Dipan Mehta and find out what he's making of the market right now. Dipan, hi, afternoon. Good to have you on the show. We've bounced up almost about 8% from those recent lows for the index alone and a bigger rebound for the mid and the small cap indexes. You think we've bottomed out for good?
Yeah, good afternoon, and thank you for having me on your show. I think certainly we have a strong bottom in place at this point of time. Whether it's a durable one, only time will tell. But predicting tops and bottoms is difficult. But if we can get a trading pattern, or rather, I would say a price pattern of the Nifty, whereby we have higher tops and higher lows, then that will give us more conviction that the worst is over for the time being, and that this particular market has entered a new bull phase. Also, the upcoming earnings will be very important for kind of sustaining this rally which we have seen in stocks. But nonetheless, I think I would say that we have a strong bottom in place, which will be difficult to pierce on the way down unless there is some significant bad news.
Good afternoon, Deepan. Shailu also joining the conversation. Like you said, the earnings will be very important, very crucial one. But a lot of brokerages or a lot of views have already been penciled in that it is likely to be a weak quarter going ahead. But when do you foresee that there could be a bounce back, especially when you talk about earnings and especially for those that were beaten down in the previous quarter, like the FMCG names?
First of all, I don't agree that March quarter will not be as good, because typically Jan, Feb, March is great for many industries, especially capital goods, engineering, construction. So that should sustain earnings. Also, oil marketing companies, refining companies should have it good because of cyclical factors. And on the whole, I don't think that it's going to be such a bad quarter. But expectations may be running a bit on the higher side. So you may have disappointment on that count. And also from March quarter onwards, you'll see the lot of benefit of the base effect coming in. So that's also something to consider. But predicting an earnings season is extremely tricky, and you may have a very patchy earnings season as well. But management commentary is important. And if generally I think the indication is positive, then I think markets and players will grab onto those positive statements, and you may see a further improvement in sentiment. But we are a few weeks away from that. But I do feel quite hopeful of the upcoming earnings season.
Of the earnings season. So Dipan, on that note, tell us where is it that you think the big swing is going to come in this earnings season? Any sectors?
I think that banks, NBFCs may report a good set of earnings. And the reason for that is that volumes have picked up, liquidity has improved, some pressure on net interest margins may have subsided, and there would be a flattening out of the NPA provisions purely on account of base effect. And a lot of provisioning has been done in the earlier quarters as well. So from that point of view, banks and NBFCs are the first sector that we'll be looking at in terms of outperformance and in terms of better deliverables in the March quarter. Apart from that, as I said, capital goods manufacturing companies across the board, whether it's L&T, ITD Cementation, Afcons Engineering, I think all of these companies typically see a lot of boost in their order inflow as well as revenues for the March quarter, and some amount of operating leverage also comes to play over there. So we may expect good numbers coming through from these companies, as also some of the other capital goods manufacturing companies, could be solar equipment companies, could be wind power companies. So I think that that's one segment which looks quite positive. And we have seen a mild improvement in urban consumption. It's visible on the street. It's visible in terms of whatever statements have come through. So retail companies, travel companies, hospitality, I think all of these companies also may report decent numbers, maybe not blowout numbers, but at least the stagnation which we had seen the last few quarters or so, that may see an improvement over there. So broadly, these are the three we are quite positive on. And cement also, I think, because of base effect, because of a better industry trends, maybe not in terms of the earnings, but definitely I do hope the cement industry managements are, more optimistic now than they are ever in the past 4 5 quarters.
All right, so those are some of the sectors that one can watch out for pretty closely. Deepan giving the rationale as well on that particular front. But right now, let's slip into a break on this edition of Closing Trades. When we come back, we will be charting the market direction given the fact that we are slipping towards the day's lowest point. Welcome back. You're watching Closing Trades right here on ET now. And if you look at the markets, yes, we've drifted lower towards the day's lowest point when you talk of the benchmark indices. Nifty Bank underperforming the benchmarks. Along with that, broader markets also are not in great shape. Kunal, what's your take actually coming in, and what should we actually build in for the markets given the fact that, yes, there's expiry also that will weigh in. You have the Nifty rejig also that will weigh in. What's your sense about the markets in particular?
So I think it's adjustment of all of these factors. The tariff data point, which is also something which the markets would probably want to go in a little bit more light, juggling of positions due to the expiry. And then we look at this as a sector churn also, possibility of a sector churn, because in this last 1800 points move for the indices, there have been few sectors which have performed exceptionally well, and they're getting into somewhat of a overbought territory on the charts. So I think it could probably be a bit of a profit booking into these spaces, and then other underperforming names, they could probably make a comeback for themselves. So I think it's a bit of a churn. This consolidation generally stays for at least a 3-4 day period. So expecting the markets to just about drift into this kind of a trading band. What we could be also doing is establishing a trading range in this last 2-3 days of up move and then consolidation. So on the upper hand, we are looking at 23,800 to 24,000 mark as a resistance, and on the downside, I still believe that 23,400 is something which the markets could probably protect towards. So any dip towards 23,400 mark from current levels should be taken as buying opportunity.
Okay, any dip to that 23,400 level should be treated as a buying opportunity. Dipan, while the FIIs have definitely turned corner, there is that looming April 2nd deadline of the tariff implementation, right? Of course, there's a lot of back and forth there as well. Overnight, Trump saying that the tariffs, if implemented, would be retrospective in nature. But tell me, do you think a large part of the tariff fear is out, at least for us?
That's a difficult one to answer, and perhaps you should ask President Trump when he comes on your channel. But how can I say whether the fear is over or not? Tomorrow, some statement comes, some additional tariff comes, could be on pharmaceuticals, could be on gems and jewelry. I mean, anything could happen. One can't say. But I think this is the new normal, and investors are getting used to it. And if you see the kind of stocks and industries which are doing well, those are all the India growth, the India focus sectors are doing well. Although I think tech has done well last few trading sessions, but that is just kind of a catch up. But by and large, what's doing well is cement, banks, NBFCs, consumer durables, engineering products, to an extent, real estate, retail like Trent. So investors are now realizing that it's better to look for companies which are domestic oriented, which don't have too much exposure to the US market. So if Trump tariff were to be implemented, those stocks, the fundamentals won't get impacted. So I think the kind of markets and investors tend to move on, and enough of these Trump tariffs and the fear around that. Companies impacted by Trump tariff, keep them aside. But rest of the market is looking good, so let's focus over there. I think that's the approach.
Well, Dipan, from your lips to God's ears, I hope Trump makes it to ET now. But on that note, let's move on and let's talk about, the ongoing trade negotiations with the US. India is likely to further lower duties on American bourbon whiskey is what we understand. In fact, we're learning that India may actually relax its stance by reducing import duties to 50% down from the current 10%. Sameer Dikshit, my colleague, is here with exclusive details on what he's picking up.
Well, amid the ongoing trade negotiations with the US, Indian government is likely to provide more relaxations by lowering the duties imposed on the import of American whiskey, or specifically the bourbon whiskey. The Indian Commerce Department is actively considering to lower the duty to further 50%, to impose a duty of just 50% on the import of American whiskey or the bourbon whiskey. Currently, if you see, the Indian government recently, almost a month back, reduced the duties from earlier 150% to 200%, which included a 50% basic custom duty and an additional 50% agriculture cess. But now government is likely to take this relaxation to the extent of 50%. A further reduction to the tune of 50% is what the Indian Commerce Department is actively looking at. However, the Commerce Department is not favoring to reduce the duty to 0% or bringing it down to nil, because they are looking to safeguard the domestic players as well. So that's what the Indian Commerce Department is currently looking at, to provide relaxation on the import of American whiskey by lowering the duties or the import tax, but not to the tune of 0%. And if you see the larger picture for the financial year 23-24, the import of American bourbon whiskey or the American whiskey was somewhere to the tune of $1 million, and government understands that this will grow manyfold when the duty is reduced, and this will help to further strengthen the trade negotiations with American counterparts.
All right, thank you so much for that, Sameer, for giving us those details on bourbon whiskey, that there is a thought going around that to further reduce the duty on American bourbon whiskey. Remember, this is all a part and course of that tariff tirade of Trump as well. But Kunal, on the charts, which Alco-Bev stock looks attractive to you, and do they look attractive to you?
Yeah, I think few of them are attractive. United Spirits, for example, that's something which has been doing very well for itself, especially from the point when the stock, I think, was almost at 750, 800 2-3 years back, towards the point when the stock moved towards 1400, 1500 plus mark, then consolidated. So, it's still looking fairly attractive. You have Som Distilleries, that's also another name on the mid-cap side which has been looking fairly attractive. It's come back towards a previous multi-month or multi-quarter high, about that 125 to 130 range. Radico is something which I think has been doing exceptionally well, from being almost 10x in the last 5-6 years, 2018-19 onwards, towards a point when the stock has gone through a recent correction. So I think these are the few odd names which still looks attractive.
Right, okay. Dipan, great to have you on the show. Thanks as always for your time. We'll let you go on that note, but just stepping into the last half an hour of trade, so let's get in some closing ideas as well going. Naresh, what's on your list?
So that would be a buy on Bajaj Finserv. That's a stock which has broken out on the short-term charts as well as closer to a 3-year high. Expecting this to take leadership in the financial space. Stop loss would be at 1930, expecting a move towards 2100.
Bajaj Finserv coming in for Naresh. Kunal, what about you?
I'll go with the buy on Shree Cement. That's a chart which is looking extremely strong, and I think one of the few large cap cement names which has actually come back towards a lifetime high. So it looks attractive at current levels.
All right, so that's Shree Cement coming in for Kunal and Bajaj Finserv coming in for Naresh. Those are the closing trade picks coming in from our experts. But on that note, we'll slip into a break on this edition of Closing Trades. When we come back, we will chart the market in the last half an hour of trading session.
Back with closing trades right here on ET now. We're at the session lows actually. It's an over 100-point fall that you've seen, or rather 1% fall that you've seen from the session highs. We started off just about marginally higher, and from there it's pretty much been a one-way move down, at least in the last 1 hour for sure. So almost staring at a 200-point decline. That's where the Nifty is currently. Just want to bring up some of the key pressure points in trade today, and that's NTPC has been quite the darling of late. That's down about almost 3%. Bajaj Finance down 2%. Kotak is down 1.5%. SBI. So it's largely a bank and financial led way down on the indexes that you're seeing today. HDFC Bank as well lower today. ICICI Bank also down about almost 0.5% as we speak. But let's get you an exclusive. The government is likely to expand existing battery scheme to reduce import dependence, and of course equipment like mixers as well, stacking machines, which may be added to the incentive plan. Prakash Priyadarshi, my colleague, is here with more details on what he's picking up from his sources.
The government is planning to provide an extra push to its EV battery manufacturing plan. Various aspects are being examined. Sources are indicating that the government is likely to expand the existing EV battery manufacturing scheme to reduce import dependency. In fact, the expansion could be done based on two terms. First, various equipments used in EV battery manufacturing likely to be added to the incentive plan. And secondly, thrust will be provided on research and development for EV battery manufacturing. Sources are informing that the domestic firms are facing challenges in sourcing advanced technology and equipments, and therefore the issue has been brought to the government's notice. Formal discussion has been initiated. In fact, Ministry of New and Renewable Energy and Ministry of Heavy Industry have held a meeting on the expansion of the scheme. However, discussions are at initial stage and will be discussed with the empowered group of secretaries on PLI before moving ahead. As you are aware, that the Ministry of Heavy Industry operates a PLI scheme with an outlay of rupees 18,000 crore, and significant progress has been made so far. Now, government is trying to expand the ambit of the scheme by providing some additional benefit. As you are aware, that the government has already announced an import duty exemption on 35 capital goods used in EV battery manufacturing. Now, additional efforts are being made to encourage manufacturing of EV battery in the country.
All right, so that's all about the EV battery manufacturing and what the government is actually thinking about doing on that particular front. But sources tell ET now that India and US trade talks have already begun, and they are likely to spread over the next 3 days. The US is looking to engage with India amidst the tariff wars with Mexico, China, as well as Canada. Sumita is here with all the details.
Assistant United States Trade Representative Brendan Lynch is in New Delhi with his team. In fact, his team is sitting with the Indian team as well. In fact, there are government officials from both the sides, from Commerce and Industry Ministry. There are industry representatives as well. And of course, officials from the External Affairs Ministry who are currently holding that much awaited meeting underway to start negotiations for a bilateral trade agreement between the United States and India. And sources indicate that, of course, the key objective of these talks is essentially to establish the TOR, or the terms of reference. Both the sides will be finalizing during these meetings that will happen over the course of the next 3 days, mornings and evenings. Both the sides will be negotiating on the terms of reference for Tranche 1, and negotiations that will be agreed upon Tranche 1 will be completed by fall. Sources also tell us that the United States is essentially looking at an approach of negotiation with India as an approach of engagement with India, and that approach has been rather different from what it has maintained so far as the imposition of tariffs on China, Mexico and Canada are concerned. It's very different from that approach. In fact, the Indian side were given to understand that it could look at a waiver on reciprocal tariffs. In fact, meanwhile, the United States were given to understand from our sources is looking for increased market access primarily in automobiles, whiskey and some agricultural products. Even though the uncertainty hovers around April 2nd, Donald Trump, meanwhile, as you may have also noticed, has maintained a rather liberal stance so far as reciprocal tariffs are concerned.
Okay, a lot of news flow. Let's welcome on board Sudeep Bandyopadhyay as well and find out what his view is. Sudeep, hi, afternoon. Just looking at the FII trend and the buy figure, at least since March 20th, one is wondering whether they are here for good.
Definitely FIIs are interested in India. I think a lot of things have worked in India's favor. Inflation coming down in India is definitely a positive, which clearly indicates that RBI will be in a position to cut rates, which should again give impetus for growth in the economy. So, domestic factors are working all right. Of course, I mean, the global issues are huge and in everybody's mind. We were just discussing tariffs, and 2nd April is around the corner. So one has to wait and watch and see what's going to happen on 2nd April. But end of the day, I think impact on India will be limited. Direct impact rather will be limited because India is not a very large trading partner of US and vice versa. However, if there is a global trade war and which escalates beyond control, I think that will affect significantly global growth, and that in turn will affect India. So, may not be directly, but indirectly India will get impacted. So FIIs are waiting and watching, and they have started nibbling in, is what I would say. But they are still cautious and kind of risk averse at this stage. That's what I would say.
Right. Sudeep, good afternoon. Cheryl is joining in the conversation. I wanted your view actually on the power space, because that was one of these narrative go-to sector. Actually, last year, you saw a correction also play out in the entire power theme. Now, this is one of the sectors that has actually seen a good bounce back with the rest of the market. What's your take now on the power space? Do you think it's an attractive level? One should actually take some, or rather, go ahead and buy some of these counters right now?
Well, absolutely. I think we have been positive on power sector for last 1.5, 2 years, and we maintain our strong positive view on this sector. There's a structural change happening as far as power in India is concerned. The demand has gone up significantly, and every segment of this sector, whether it's power generation, transmission, power financials, power ancillaries, power distributors, everywhere there is a strong demand, and there is enough and more opportunities for expansion and growing capacities, and catering to the demand of the enhanced overall power demand in the economy. So we continue to remain positive. NTPC at current levels, definitely a good buy from a long-term investor's point of view. They're the leading generator of power in the country, fantastic backward forward linkages, and has a potential to significantly move up from current levels in about a year's period's time. Look at the financials. I think the amount of incremental power capacity which needs to come up over the next 5 years is huge, and that demand, the financing demand for that, cannot be met by banks. So obviously the power financials will play a significant role. So whether it's a PFC, REC, or even IREDA, I think deserves a look, and it's worth definitely buying from a long-term perspective.
Yeah, it's really all about that. In fact, the tight power market, the structural growth, all of them make a compelling case for the entire power sector. And of course, after the recent market correction, you are looking at compelling valuations. I think it's really a play of valuations that you need to really look out for within power. It's a given that it's a structural story, but yeah, does sometimes warrant caution when the valuations do get exorbitant. But Kunal, you've been also very bullish on NTPC, right? And the charts, barring today's correction, what are the charts holding up for in the short term as well as the medium term?
Yeah, it looks very attractive. In fact, NTPC, and you don't see stocks like NTPC falling by 25-30% in a span of 3-6 months. They are more prone towards very subtle kind of uptrends, something which are very, very slow. You don't spot those patterns very clearly for these stocks, and something which are which are durable, and they last for months and quarters to on a trot. So for NTPC, I think this last 30-odd% correction, I think has to be taken with both hands. From 440 odd levels, I think if I'm not wrong, to 320-30 thereabouts is where the stock had corrected. And you see the volume patterns, you see the double bottom pattern for NTPC, the recent high for the stock, and the resistance the stock has developed at the 200-day moving average. All of that indicates that it's a very strong chart in the making. I think dips, say even if it comes back to say another 10 points on the downside, closer to 340 odd mark or slightly lower than that, that should be taken as very strong buying opportunities, especially from a medium to long term play.
All right, so that's the word coming in for NTPC. Coming to you, Naresh, I wanted your view on the real estate pack. And in real estate pack, I want to primarily talk about actually Aditya Birla Real Estate, erstwhile known as Century Textile. How is that one looking to you? It's a lot of news flow have been a positive one for this one. Right now, it's actually given up all of this morning gains. How are the charts looking for this?
So technically, after a correction from 3100 down to 1800, the stock is trying to form a base. We've made 3 bottoms around that 1750, 1800 mark. And on the upside, 2200 is a resistance. So looks like a case wherein the stock could consolidate and not really rally up so soon. So a consolidation phase, maybe a short-term bottom could already be in place, and 1750, 1800 should hold. But a momentum move is some time away.
All right, so that's the take coming on the real estate space. Sudeep, what's your take actually on the entire real estate pack? No doubt the sales have not been that great of late, but if you look at the luxury market, that one is booming, at least in the NCR region. That's what the reports are indicating. What's your take on real estate, and how should one play this theme?
You hit the nail on the head. I think luxury real estate is doing really well, particularly in NCR. And obviously, DLF is a buy. I think the kind of inventory they have, land bank they have, and the kind of potential they're sitting on. I think somebody looking at building a long-term portfolio, wanting a real estate exposure, DLF definitely should be included in that portfolio. As far as other markets are concerned, I think the way things are moving, I don't see too much of a problem in the real estate segment. Also, remember, interest rates in the economy are coming down, and they will continue to come down for some time. And whenever interest rates in the economy comes down, it benefits real estate directly as well as indirectly. So I am not in the camp which believes that there is going to be some challenges in real estate. I think we are in the in a cycle, a positive cycle for real estate, and we are probably in the mid cycle. I think the rally has many legs to run even now. Yes, there will be dips and volatility in between, but I think there is absolutely nothing to be afraid or scared as far as real estate is concerned. When there is a sharp market correction, when there is a slowdown in the economy, real estate also shows a bit of weakness. But I think we are on a good wicket if you consider medium to long term.
Come next month, and that entire income tax saving as well is going to flow in. You think that's already priced in by some of these FMCG and cap goods players, or do you think there could be some more headroom in these segments?
Asha, is that for me?
Yes, Sudeep, for you.
Sorry, can you repeat the question? I didn't get the first part.
No, I was just wondering, the entire FMCG and consumer goods segment, because of the income tax saving, do you think that move is behind us, or could there be further headroom in these segments?
Well, I think that move is behind us, definitely. There are concerns around how monsoon is and how demand is going to pick up. The consumer durables sector, there was some commentary which was coming yesterday, which kind of doesn't paint a too good a picture. The demand hasn't apparently picked up that much. And I think we have to wait for the demand to pick up. I think the real challenge for FMCG as well as consumer durable was demand. If and when demand picks up, I think the segment will come out. Yes, the tax benefit given by the government in the last budget will percolate down to individuals in the next fiscal, and I'm sure consumer durables will benefit out of that. But I think there is a lag for that to actually fructify on ground. We have to wait for demand, and I expect that the interest rates coming down in the economy, as well as expectation of a good monsoon, should probably cheer the FMCG and consumer durables in Q1, late Q1 and Q2.
Coming in on the consumer durable space. Kunal, anything that's looking good to you on the charts right now from the consumer durable space? A vast one, I know that, but what's your take?
Yeah, I think few odd names are, but I was actually looking at the underperformance for in the consumer durable space in this leg of uptrend, and most of the stocks in that space have actually disappointed in terms of the price or expected price up move. I was actually looking at least so when the indices come back into a 5% to 10% kind of a band of price uptick, then you're looking at least 8 to 10% uptick into many of these stocks from their previous swing lows. More importantly, I think you're looking at potential breakouts for these stocks from their previous swing highs, but we've not seen that happening for the space as such. So I would probably be a bit more reserved into the space.
Okay, a little bit more reserved when it comes to cap goods, at least, or consumer goods, I beg your pardon. We'll take a very quick break on that note, come right back. Okay, we will take the BTST trade, stand corrected at that. Naresh, what's on your list?
So first will be a buy on Bajaj Finserv, a breakout trade here, stop loss at 1930, target price of 2000. Second is a buy on IEX, which has made a strong recovery and could be setting up for a move going forward, stop loss at 175, target price of 182.
Your strategies.
So I'll go with the buy on trend, something which I discussed in the morning also. Looks attractive at current levels. Would look out for targets in the range of 5,500. Stop loss now could be kept at 5,200. And SBI Cards is something which continues to look extremely strong. The stock is on the verge of a pennant as well as a triangular pattern breakout. So targets of 920, stop loss at 850.
Sudeep, I want to pick up on the entire wire and cable segment. Now with the Adani entry as well into the space and the correction clearly played out in the entire segment as well, do you think any of them makes it to the core portfolio, or would you say need to wait it out? This could very well be the, Birla effect on the Asian Paints kind of a story or case, and we may see a prolonged derating for some of these names like a Polycab, a KEI, or an RR Cable.
Cables and where segment is concerned, I'll be extremely cautious. And you are right, we are probably seeing a replay of the paints, what happened in the paint segment with the entry of Aditya Birla Group. With both Birlas as well as Adani's entering the cables and wire space, I think the competition will be hotting up significantly. They have declared that price competition is not the way forward, but I don't believe that will be followed on ground when actually competition starts, when the facilities are ready. So yes, one needs to be cautious as far as the existing wire and cable players are concerned. And remember, they were not quoting at a cheap valuation. They were actually significantly richly valued. So a bit of correction was anyway due, and this announcement, both two announcements have really, set the cat among the pigeons. So we have to be careful here. There is no point trying to do value buying here yet.
Value buying yet, at least in the cables and wires segment, given the fact that not one but two competitors, new competitors trying to enter that market. Naresh, on the charts, any of these counters look good, at least for trading purpose?
Because after that fall, they've not seen a sharp recovery as such. It's just that after such a fall, the short trades do not become risk reward. So avoidable, not a long.
Is what Naresh is saying about that particular space. Let's just take a look at what Siemens is doing in trade today, given the fact that you have NCLT that has approved the demerger of energy business. This one is flying high in trade today, 5.8% uptick coming in for Siemens. Also, apart from that, take a look at Bharat Dynamics, what that one is doing, because the sizable order coming in for Bharat Dynamics as well. And also Ashok Leyland, because they've come out with the news that Hinduja Leyland will be allotting shares at a price of around 200 rupees per share. So Ashok Leyland over there actually given up those early morning gains. Remember, they've come out and they've outrightly refuted the fact that they are looking to acquire their majority stake in SML Isuzu. So yes, look at that counter as well, SML Isuzu, what that one is doing, post the clarification coming in from Ashok Leyland, given the fact that they've staunchly and outrightly denied that particular move. Kunal, coming to you, what's your take coming in some of these CV players? When you talk about commercial vehicle space, likes of Ashok Leyland, or for the matter of fact, Tata Motors, if you're looking at that particular arena of Tata Motors, how are these players looking to you?
So they're looking quite okay on the charts, not very exciting, frankly, Cheryl, because many of these stocks, in fact, the entire auto sector is going through a very tough time right now. I think except for Eicher Motors, of course, not the CV player, but that's the only stock which has done reasonably well. Most of the other stocks, whether it's M&M, Maruti, Escorts, Tata Motors, Ashok Leyland, also to a larger extent, Auto Ank names, all of these stocks have underperformed quite significantly. And even in this leg of uptrend, we've not seen any major bounce. So what happens is either there is a price-wise bounce into these stocks, or there is an indicator-based bounce for these stocks, and that would probably help us determine the trajectory of the path going forward for these stocks. And in this case of a price uptrend for many of these names, we've just seen a more of a tepid bounce on the prices, not something which is strong on the indicator front. And that's why I believe what you're seeing is that these stocks, they tend to move up higher in a couple of days when the markets are extremely strong, and then the momentum just fades away when the market also gets into a corrective phase. So that's generally an indication that the sector would go into its own drift, consolidate at current levels. Maybe I think another 4-5% on the upside, but broadly I think from here to the next 2 to 3 months, you could probably expect that these stocks may slightly underperform.
That's the take coming in some of these auto plays. But Sandeep, since banks and financials at large seem to be the consensus trade, tell us what your preferred list is within NBFCs and the banking pack.
Well, as far as banking is concerned, I do like SBI. I think a lot of things are going good. Overall credit demand is strong. Asset quality has improved. They don't have too much of unsecured or a microfinance exposure to worry about. Subsidiaries are doing exceedingly well, and valuation-wise, it does look attractive. Of course, interest rates are going to come down, and that does help efficient banks for a period. So all put together, SBI definitely is a good buy at current levels. As far as NBFCs are concerned, I do like the gold loan companies. Recent RBI change has probably put a slight disadvantage in terms of cost when the portfolio sale by gold loan NBFC gold loan companies will not be treated as priority sector loans in banks' books. So that is a bit of a dampener in terms of cost, but otherwise I think both the gold loan NBFCs, Muthoot as well as Manappuram, should be looked at. I think the demand is robust, gold prices are zooming, and I think they have gone over that regulatory challenges and regulatory issues which they were facing. So considering all that, I think both of them deserve a look from a portfolio point of view.
Okay, that's the take coming in on where the entire NBFC segment is headed and what's looking good within banks as per Sudeep. But Naresh, what's your own sense given the move that has already taken place in Manappuram and Muthoot? Where do you see these stocks headed next?
So it could be Manappuram, which looks interesting because that has finally hit a new all-time high after 5 years. So on dips going forward for the long term, it could be Manappuram that looks interesting in terms of outperformance, and Muthoot has been a consistent performer, so both remain a buy on dips.
All right, so that's the take coming in on gold loan financiers. Coming to you, Sudeep, I wanted your view coming in for some of these counters that have actually reacted to the developments when you talk about the EV battery manufacturing, like for the likes of Exide, or for the matter of fact, Amara Raja. We do speak at length when you talk about auto players. We speak at length when you talk about two-wheeler players. But yes, when you talk about auto components, this one is a very critical and crucial one.
Absolutely right. And if you were talking about EV, I think the most important thing is the battery. And that's what the thing which actually takes the vehicle forward. And this is a very, very critical component for an EV. So I think the government of India is trying to do the right thing by providing incentive for domestic EV battery manufacturing. And I think it's in the right track. Of course, both Exide as well as Amara Raja Energy, I think they are setting up large plans for EV battery manufacturing. They have the skill sets of battery marketing and acting as OEM for the IC engine companies. I'm sure they will, with a bit of tweak, do a great job as far as EV batteries are concerned also. And with all these incentives and exemptions on import of capital goods for EV battery manufacturing, I think things start looking even better for both these companies. So I have been positive on Exide for a long time, and now I'm positive on Amara Raja as well. So both can be looked at from a long-term perspective. I think that's the future. So one has to look at that.
To have you on the show. Thanks as always for your time. Winding up for trade, and it's definitely been quite a fall that one has seen from the session highs. Tomorrow, of course, being expiry. Look at a Siemens, that's still going home a winner, about almost over 5.5% up move is what that stock has seen. There's, of course, been HAL. Trent has seen a decent bounce. It's back at those 5,300 odd levels. And then AU Small Finance Bank, which is part of Goldman Sachs strategic stocks, that also is holding up quite smartly in trade. But for the rest of the movers, I'm going to hand it over to Snehi.
Absolutely. Let's take a look at what the market action has shaped up to be like in today's trading session. It's been a very somber trading day for us, and we've seen massive cuts coming in from the day's highest point. If you take a look at where the Nifty has ended from the day's highest point, it's 250 point cut coming in for the Nifty on an intraday basis. Although on the spot basis also it's lower by roughly 200 points. We've struggled to even hold on to the 23,500 mark. At one point of the trading day we were above the 23,700 mark. So looking very somber when it comes to the Nifty. 58% cut coming in over here. Sensex also, not surprisingly, in tandem with the Nifty, slightly steeper cut coming in over here. So it's a 1% cut coming in for the Sensex in today's trading session, also looking very somber. Let's pull up Nifty Bank, because 0.7% cut is what we are seeing on that index as well. It's a lackluster trading session from both private banks as well as PSU, so looking very mellow on that note as well. Advance decline ratio barely in any stocks in the favor of the advances today. It's very steeply in the favor of the declines. On the back of that, let's pull up in India VIX and see why the India VIX level has ended in today's trading session. It's lower, it's on the lower side, so at least that is something that's been going on for our markets on the better side. Let's take a look at some Nifty 50 gainers. IndusInd Bank, Trent, Hero Moto, Bharti Airtel, Grasim, HCL Tech, all of these stocks have been winners in today's trading session. On the flip side, NTPC, Tech Mahindra, Cipla, BPCL, Bajaj Finance, Axis Bank, Infosys. So it's really been a mix of IT, private banks and pharma that have not done all that well in today's trading session. Let's talk about some sectoral gainers and losers today. Nifty Auto, surprisingly, the only sector that was standing in the green for the longest time, has also managed to end rather flat. Okay, it's on the flat line, so a little bit of a shade of green, but there you have it, it's flipped into the red. So between the red and the green is where Nifty Auto is. All sectors have ended in the red today. In the first half, at least, you had auto and metals that were doing well, but steep cuts coming in across the metal index as well. You have FMCG, metal, pharma, energy, IT, PSU Bank, Realty and Nifty Media is your biggest loser in today's trading session. That's the pecking order of all the stocks. Let's throw some light on some of the big gainers in today's trade. Like Aisha mentioned, Siemens is one stock that has managed to hold up very firmly in today's trading session on the back of the split of its Siemens Energy India business. So that stock is also up by almost 6%. Bharat Dynamics, big order win coming in, 4,632 odd crore rupees. That stock has also done pretty okay in today's trading session. That's Bharat Dynamics we're talking about. HAL, now that stock has been a high flyer from the midday mark in today's trading session on getting the news flow that GE Aerospace has delivered first of the 99 combat aircraft to HAL. So looking good for that stock, and 3% uptick is what that stock is also seeing. NCC, two big order wins coming in, roughly about 10,800 crores is the total size of the order. 1.5% higher is where NCC has ended in today's trade. Now on the back of some brokerage action, watch out for Zomato and Swiggy in tomorrow's trade. Negative note coming in from BofA, a price cut as well as a stance cut coming in. Swiggy and Zomato both have ended in pressure. Also watch out for Zomato in tomorrow's trading session on the back of the Nifty 50 rejig that's going to be happening tomorrow. Zomato is going to be replacing BPCL and Jio Financial is going to be replacing Britannia. So watch out for how all four of these stocks act. But well, with that, we'll conclude today's trading session. That's how we are shutting shop for the day. We'll give the rates some time to settle, but nonetheless, very steep cuts coming in on the Nifty 50 in today's trading session. We have snapped the 7-day winning streak that we were seeing on the market.